last time you were on, we got to that lithium market. We had the rockets going when it comes to viewers. Let's do it for uranium. So let's set the scene to begin with, though. Let's go and have a look at what's going on in the broader energy market at the moment, concentrating on thermal coal to kick off with.
Yeah, good afternoon, Scuddy. You know, I was getting asked about these uranium stocks as potentially the next lithium. So I thought, you know, we did lithium last week or a couple of weeks ago. Let's check out the uranium sector and see what's going on there. As you suggested, thermal coal up front. Just putting this chart in just to show some of the dislocations in global markets at the moment, particularly obviously in energy supply and energy security. And who would have thought, with all of the all of the negative press that coal gets, obviously from an environmental standpoint, that we're seeing prices absolutely rocket in the wake of obviously the pandemic and more recently the Russian invasion of Ukraine. So, you know, this is the backdrop within which we investigate uranium. Coal prices, whilst they're very high, you would expect can't stay there simply from the fact that we cannot continue to burn coal forever. It's about 40% of current global energy production. Nuclear, on the other hand, is 10%, and one would expect those two numbers surely have to come together at some stage.
Yeah, zero carbon emissions as well, which is really key. Of course, you can go and outline what's going on with European gas prices as well. Same sort of chart as we saw then, bottom left, top right. So let's see what happens when it comes to the uranium price, because people are looking for substitution effect right now. How is it looking on the charts?
Well, you would love to say that it looks just like thermal coal, but it doesn't. And there are a number of very good reasons why that's happening. So we're looking at the spot price of uranium now over the same period as coal. But you can see, look, it's obviously starting to trend higher over the last few years. And that's after a substantial decline from the GFC. Fukushima in 2011 had played a big role in depressing prices until sort of 2017, 2018, where it just became, the uranium price was just so low that many companies just couldn't pull it out of the ground and make any money. So we saw a bunch of mines shut down, a couple of which we're actually going to talk about today when we get to the ASX stocks. And that has obviously restricted supply to some extent, balanced out the market. We've seen prices rise more recently, as I said, pandemic impact, supply chain issues, and then the war in Ukraine. The other key factor, Scuddy, I'm sure you're on top of this one, is the Sprott Physical Uranium Trust, Toronto-based Sprott. They do a bunch of other sort of physical gold, physical silver, and other precious metals. But early last year, they branched out into uranium and have been steadily buying. So they've picked up about $3 billion US of the stuff on spot markets, and that's another big reason for prices to go up. So that's, I guess, history. Looking down the track, the market is actually in deficit as we speak. So there is actually more uranium being used than produced. But don't forget, all of those idle producers are probably going to come back online at some stage. I would suggest if prices remain about this sort of $50 US a tonne to 60, that's the key level. You can see stability above there. It will allow them to come back into production, and that will just tip the balance back to sort of equilibrium. But if you go much, much further down the track, the expected increase in demand from those nuclear power providers is actually going to swamp the supply because we've had such a prolonged period of underinvestment in the industry. So there is an environment there which is similar to lithium, potentially down the track, where you could see uranium prices do very well.